And more. Let's bring in somebody who knows. That is Mohamed El-Erian. He is the chief economic advisor at Allianz, and Interactive broker Steve Sosnick is still with us. Mohamed, I feel like, and you'll appreciate this, or you'll yell at me, I don't know, the latest economic data is like the economic version of the New York Jets, your team. Because we always have this hope, and then it's just letting us down. But there is always hope. So do you view this latest round of data, I don't want to say as meaningless, but do you view it as long-term or, dare I say, transitory?
So thanks for having me, Brian. I will ignore the Jets reference, although it is accurate. I will ignore it. Look, the image of Rick today trying to find when it was that consumer confidence was so low and going through his whole sheets, and he couldn't, is one that's going to stick with me. Having said that, the survey data doesn't translate into hard data in any predictable manner. Secondly, there are three incredibly optimistic views in the marketplace when it comes to the economy. One is, even if the consumer were to slow down, it doesn't matter. We have other growth engines, AI. Secondly, the inflation side also wasn't good today in the survey. There's the view that inflation will be transitory. And third, there is the view that we have policy offsets. So, I understand why the conventional wisdom is ignore the consumer confidence number. I wouldn't ignore them so quickly. I do believe in behavioral economics. I do believe that there are tipping points in the economy. And I also think the US doesn't control outcomes as much as the market thinks. So when I put all that together, I don't automatically translate the really awful number into the economy, but I don't share the optimism that is widespread among the economic analysts on Wall Street.
Yeah, and as we dive into that, it opens the question, Mohamed, of what the Fed should do, especially depending on who's in charge. When might Kevin Warsh actually take over? And what if Powell remains de facto leader?
So first, we heard about the delay today, and I have no reason not to believe that it's due to paperwork. But it does mean that we're getting awfully close to the May 15th date when the chair's term ends up. I don't want us to be in a situation, Kelly, whereby the chair stays in as an acting chair and President Trump decides to have a go at the Fed. I don't think that's in anybody's interest. So my hope is that we'll get the nomination. My hope that this will open the way for a vote by the Senate. As you know, there's other things there, including the DOJ investigation, because the alternative is going to be a lot messier.
The way I'm going to look at this, and I'm certainly not going to dispute this, is...
Well, he sounds like he agrees with you, Steve.
Yeah, to a certain extent.
Like Mohamed, from an economic perspective, I don't know, Mohamed, if you heard, Steve's got a $6,500 target in the S&P, and so you are worried. Sounds like you guys kind of agree.
The reason why I put that number on at the end of last year was threefold. But the two main things were midterm election years have been terrible recently. The last two down years out of the last 15 were midterm election years. So we got that going against us. Also, markets have an uncanny way of testing a new Fed chair. If you look, it doesn't happen very often. So it's not like the thing we talked about before, 19 out of 20. It's like 4 in recent memory. But the new Fed chairs often get some sort of real-world test. In Greenspan's case, the market crashed right after. In Bernanke's case, the global financial crisis was right on the heels of him starting. So that doesn't mean that this is going to happen. But the test now might be the stuff that Mohamed was just talking about is a political test of the Fed itself, not necessarily of Kevin Warsh. And that should be concerning. It's definitely, in terms of things that one should be cognizant of, that's certainly an issue. The other thing, if I have a second, is I put out a piece, I think last week, called Dude, Where's My Rate Cuts? And, I think the market mentality about rate cuts is we've basically around the world, all the global central banks have either priced out 50 plus basis points of cuts or added in 50 basis points of hikes. And that's a big change, I think, to the global outlook.